Hi, everyone. Thank you for joining us today for today's webinar. My name is Stephanie Garcia. I'm the commercial manager over here at Storm2 Singapore. Today I am joined by Geoff and Ming Wang. Could you tell us a little bit about yourselves, Geoff and Ming Wang, before we get started?
Yeah, sure. So I can start. Thanks a lot, Stephanie, for having us. So my name is Geoff, and I'm the CEO of TradeTogether, a startup that we actually founded back in August 2021. And we are offering a robo-advisory solution for cryptocurrency.
Hi, I'm guessing that's short and sweet. Thanks. Thanks, Geoff. I'm Ming Wang. I'm the co-founder and CEO of OPAL. We are a neobank serving small and medium enterprises, and very specifically in the international trade user case. So we provide things like global digital business accounts. You can store multiple currencies. You can get financing, which is very specific towards international trade. And you can make both payments and collections, over 180 countries around the world.
Okay, perfect. Thank you. As you all know, the FinTech industry in Singapore is booming, right? The industry hit its 5-year high of 191 deals transacted in 2021, as compared to 139 in 2020, right? So FinTech funding grew to over 27.5 billion USD in 2021. And, the majority of, what we've seen right now is that, FinTech funding for crypto and blockchain is taking the top spot while, in Singapore, while payments has dropped to second, while, it's still remaining a global favorite, right? The majority of the crypto and blockchain deals for Singapore in 2021 went towards software and underlying infrastructure rather than services. And, this year, cryptocurrencies are expected to receive continued attention from regulators in Singapore, as Singapore tries to balance the benefits of financial innovation with any risks that are associated with this space. There's still, another trend that we've seen is continued interest in areas like buy now, pay later, embedded banking and open banking aligned solutions that have helped keep the payment space robust. That's just a few of the trends that we have noticed on the market. We're interested to hear from both of you in terms of what are the FinTech trends that, we can expect to see in 2022, from your side.
Yeah, thank you so much, Steph. So I can maybe kickstart. So that's a vast question. What can we expect for 2022? So there are several ways to look at it. I guess one option is to observe, first of all, what happened in 2020 and 2021, and to see the forecast for the decade, for the next 10 years, basically. So I think the world has shifted in a working home by default status. I guess all the listeners who are looking at it right now have all experienced working from home. So I guess there won't be a sort of comeback working in the office 100%. So all the customer, I would say, way of paying, customer way of consuming has totally shifted to a new world, and we all know that. So I guess you have some services that have exploded related to online payment, for sure. And I will let maybe Ming Yang to elaborate a bit on that. But I also think that the level of innovation from a myriad of players has been super active in 2020 and 2021. So we can expect that 2022 will be the same. If you look at some report from McKinsey and other prestigious consulting firm, we know that just in Asia, which is called as the world consumption sort of growth engine, we expect to have 10 trillion of consumption growth opportunity for the next decade. So I guess, Stephanie, the simple response to this is that there is a fantastic opportunity to have maybe 1 trillion market for all the FinTech sector in APAC. And we're going to have a lot of type of sector impacted by that. I guess from a consumer experience perspective, we're going to move towards more and more mobile-first approach or embedded finance. So when I say mobile-first approach, it's really the capacity to do everything in your mobile, from consuming to paying. I think to some, if we just stay in Singapore, we can take the usual suspect like Grab. If you expand a little bit, Gojek. On the insurance side also, we can see lots of merging way of operating with some new fintech. I think to Autumn, for instance, we try to gather lots of services for you to aggregate and to find the better price in terms of insurance to insure yourself and your relatives. But consumer lending also, payment. So I think we can expect to have a fantastic year 2022 again, if there is no kind of market downturn in the traditional industry. And I guess we're going to have lots of funding also coming from VCs. So that's what I can tell you for now, Steph.
Perfect. Ming Wang, what about you? What can we expect from your side, or what do you think is going to happen in 2022?
Yeah, thanks, Steph. There are so many things happening really, really quickly right now when you talk about fintech, because fintech's a really broad term to begin with, but I'll probably try and highlight just a few that I think really stand out. I may be biased, but I do see a rise of neobanks trying to enhance the user experience in their respective niches. I do see that coming up. We see that from both native neobanks being built up from the ground, and we also see what's interesting, a progression of payments firms looking to building other business channels. So a pure payments player now is starting to look into finance, into incorporating insurance, into trying to embed other value-added products into their mainstream. So I think that will help them potentially evolve into some sort of a neobank potentially. That's been an interesting development. Perhaps a bit more nascent in Asia, but we have seen this taking place obviously in the States and Europe. Another thing that is very obvious is obviously, I think the evolution of firms to start considering the adoption of blockchain technologies, perhaps as a complement or alternative to more mainstream payment networks. I think this has been really boosted by I think the development of blockchain technology. I mean, you're looking at Polygon, for example, being able to handle a larger number of transactions and lower gas fees, has made it much more economical for firms to adopt it. And then, of course, you see things from decentralized finance, from DeFi, coming into the fore, which seems to be pushing towards a more open banking, open financial agenda. I think that's very, very interesting. Beyond that, we also see banking as a service. We keep an eye on this because banking service provides, in a way, a very agile, modular system for traditional banks to be able to plug and play into all sorts of different capabilities. So it's not just new fintechs, it's even traditional banks starting to look at new ways to evolve, which is about time, frankly. And then, of course, as you mentioned, the rise of buy now, pay later. We do see a lot of use cases coming from it. What's interesting is we're starting to see it spread out from being just a very consumer buy now, pay later, where you're using it to buy an iPhone or to buy cosmetics in a department store. We're starting to see buy now, pay later moving towards potentially higher ticket items, from renovating your homes to potentially paying down your business costs. So I think those are sort of the main areas that I've seen quite a lot of changes, and I expect to see more in 2022.
Okay, interesting. And I think so, Ming Wang, actually, just to follow up on what you mentioned in terms of neobanks, right? So you touched on that a couple of times. How to what level, right? How disruptive will neobanks and robo-advisors be for traditional financial providers?
Yeah, so I think it depends how we look at it, right? I think if you talk about, your question is disruption, right, to traditional financial providers. I think if you talk about disruption in the way that the industry of finance and banking serves customers, then yes, right? Because neobanks are not as burdened by heavy legacy systems in terms of its processes or its software. We can build afresh, and I think that allows neobanks to be a bit more ready and even accepting of connecting with the broader ecosystem of fintech, and that's twofold. One is being really API ready, and the other one is culturally, neobanks are quite open to connecting to the broader ecosystem. So that results in a better way of serving customers. And these are things that even traditional banks and financial providers are looking into as well. So disruption in the way we serve customers, then absolutely. but it's not in the sense that it's going to take, say, a bank's business overnight. I think that's a misconception. I really want to clarify. For two reasons, right? Neobanks are built to address, I think, clients and areas which are underserved. Because if it's overserved, there's no point going to it. So areas which traditional financial institutions either do not have much interest in presently or are unable to serve anyway in the short to medium term, right? So it's not like you're taking their core business today. Another interesting thing to point is because, for example, OPAL, we're licensed as a major payment institution in Singapore. Regulations requires that every dollar we take of our client has to be safeguarded with a tier 1 bank. So in effect, we are like a cheap source of funds for the bank, right? And we're serving a market which the banks may not be particularly focused or able to serve today anyway. So in that sense, we're not taking their lunch, we're actually complementary. So that's kind of my take on how you view whether we're disrupting traditional finance.
Okay, interesting. And Geoff, what about in your opinion? How disruptive do you think it's going to be?
Yeah, no, I think lots of good point stated by Ming Wang. Maybe to complement that, I will say one of the responses is how far traditional financial providers are pushing to disrupt themselves in first place. I mean, if you look at before COVID-19, right, it's like the whole world. How many banks or asset managers told themselves, oh, we have to react, we have to innovate, we have to execute a proper plan? I guess, I don't know all the banks, I don't know all the asset managers, but I'm sure at least one person has tried to innovate and to develop a new sort of way to disrupt themselves. But I guess the question is really how far all those traditional institutions are capable to innovate, and first of all, to innovate internally. And like Ming Wang said, there is this legacy system which creates a little bit of obstacles. So I remember back in 2018 and 2019, there was already some asset manager and banks who call themselves as being a FinTech themselves. You know, like a way to say, okay, we are not a bank anymore, we are not an asset manager anymore, we are just accepting at each level of our companies across the world to disrupt ourselves. And I think that's really the message to pass, and what some regulated banks, even heavy regulated banks, tier 1, have tried to do. And maybe one good illustration of that is the number of neobanks or virtual banks that have been created by traditional banks themselves, just in Hong Kong or in Singapore or even in the US. So I think there is a lot of chess game here for banks and for the traditional financial sector itself to try to find a way to stay in the market competition by just developing on their own, internally or externally, some sort of virtual banking. Now, when we talk about robo-advisory, I think this is for sure what we can expect into the traditional space. We have very good players in Singapore who are operating super well. On the crypto space, there is ourselves, a little bit of advertising, of course, TradeTogether for high net worth individual and institution. And I think that's the new normal, just because if you just look about the past 2 years, right? It is just too difficult to manage and your normal life and your office and your day-to-day task, and at the same time to focus and to allocate 5 hours just in a week to discover what's a new blockchain, what's a new stock, and so on. Only professional can do that. So I suspect the robo-advisory is here to stay, and on both sides, financial, traditional world, and also on the crypto space for sure. Yeah.
Okay, all right. And you guys briefly touched on this in terms of the regulatory standpoint, right? I think in Singapore, obviously there's a very strong regulatory framework in place. But what can we expect from a FinTech regulatory standpoint across the region in APAC?
Should I kickstart or?
If we're still going
Whoever,
back. I can go ahead with this. No worries. I'll take this. I think we do see putting myself out here, I think sometimes in APAC, we're seeing regulators, take 2 steps forward and take 1 step back. And to be very candid, that is understandable. It can be frustrating as an operator, like for myself or Geoff, but it's because you're trying to push the boundaries. But I understand that then they have to then quickly adjust to protect the public and obviously our clients and customers. So that's fair. Now, again, when you talk about APAC, it's very, very broad, right? So, recently in Singapore, for example, we saw the introduction of the Payment Services Act, where they tried to regulate, multiple regulated activities from account issuance to digital payment tokens to payments, domestic, cross-border, and so on. And you think, oh, fantastic, that's a really good step in the right direction. And then, very recently, there was an announcement by the MAS, the Monetary Authority of Singapore, which was telling digital payment token service providers that you can't advertise unless it's on your own social media or your website. What does that tell to investors and the operators? I know probably Geoff is probably, has better insight there. So it sends very mixed signals. I can understand why they're doing it that way. But obviously for operators, that's a bit tricky. On the other hand, you look at other jurisdictions from a regulatory standpoint, and you can see, for example, more formalized frameworks. I think we see it, from in terms of like Bank Negara in Malaysia, the National Bank of Cambodia, for example, coming up with new regulatory frameworks to try and govern, I think, fintech businesses in a lot more comprehensively. But it is a work in progress. So if you look at the guidelines for payment services companies in Singapore, if you print it out, it's about this thick. When you're in Cambodia, it's probably about a quarter of the size in terms of the guidelines and things like that. But because it's a work in progress, right? So I think to as a sweeping at the risk of overgeneralization, I think there's a lot more formalized rules coming out from each of the markets, which is good, because then it brings fintech more and more into the mainstream. But at the same time, the unpredictability can be a bit challenging for us operators, because you never know when they're going to take a step back. So that's something that I'm kind of sensing and personally going through with regulators in the region.
Yeah. So I think again, it's a great question, and there are several angles to look at it. Maybe a good example, if we just stay for a second in Singapore. So first of all, I'd like to pay a tribute to the MAS who created and rolled out the PSA Payment Services Act back in 2019, which was probably, it was maybe one of the first countries to have a sort of clear guidance and clear instruction on what to do, how to obtain exemption, how to operate. So maybe first of all, kudos to MAS. I think for those who live in Singapore since a couple of years now, not sure if you remember all this new type of bicycle that we could rent everywhere. Not sure if you remember that. OPAL, there was lots of bike that we could pick up from everywhere. And something which was interesting was Singapore is generally, in general, super well organized. Everything is at the right place. And for the first time in Singapore, we could see a bike everywhere sitting on the street. It was not parked properly, right? And I guess I'm taking this image because I think it's a good illustration also to see what issues the regulators and countries are facing. And I can understand that we can't, the regulator can't give the permission to crypto players to over-advertise their product, because behind there is a notion of customer protection. And I guess we have all been the witness of lots of hacking, scam, and things of that nature. So I think there is a sort of balance to found. And each country across APAC, and I would say across the world, have tried to have their framework. And I think everyone is looking at each other to see what's the best angle to operate and to set up a right framework. To complement maybe what Ming Wang said, I think we need to go to a sort of regional framework as best as we can, or at least to have a sort of convergences in APAC, pretty much like what EU is trying to do now with MiCA. They are trying also to somehow implement what France has already done with the PESAN, which is closed in terms of later as a PSA. So I guess I totally understand the struggles that the regulators are facing, but at the same time, if we are playing well, we keep a sort of ethics and we make sure that as a crypto player, we are operating without any breach of the Singapore law. Singapore is the right place to operate. This is our view at TradeTogether.
Okay, interesting. I think so. We actually have a question from the chat, right, from one of our viewers, which I think kind of ties into what we're discussing right now. So, in your opinion, will FinTech help in reducing, the incidence of fraud in digital insurance? Or, given that digital insurance is a relatively new thing on the market, right? What's your take on it?
So maybe on my side, what I will think is it can be. I think there are existing framework which are pretty, I would say, mature. I think to some, excuse me for the jargon, but some frameworks such as ISO 27001, SOC 1, SOC 2. So if some FinTech can bring, I'm sure some FinTech can bring some added value to the cybersecurity space, to the way, let's say if we go to the blockchain, the way we have some cross-boarding and interoperability without having any vulnerability at the smart contract. So lots of FinTech are doing this. We can see with the TradeTogether lots of innovation in that domain. So for sure, lots of FinTech can bring the added value by merging, I would say, the best of the traditional finance in terms of security and framework. And just in Singapore, there are some recommendations from the MAS, the MIS tech risk framework. And at the same time, providing some solution at a better speed compared to traditional institution, I guess. So I'm pretty bullish on that. And it's a space that we can look at to really scale up within the next months in that domain.
Yeah, Steph, I guess I think with the aspects on digital insurance, it depends on which. Can I just clarify on your particular question? Are you talking about insurtechs or providing digital first insurance, access to insurance, or do you mean digital insurance in terms of insurance that will be a wrapper around different fintechs in the market?
So on this one, this was actually a question from one of the viewers on the chat. So I'm not sure what they were referring to exactly. So your pick or both, whatever you would prefer to answer on that one, yeah.
Yeah. Okay. So if I were to say, let me look at the question: FinTech help in reducing fraud in digital insurance? I think if we were to take a step back and we look at FinTech as being an aggregator of significant amounts of data of the parties involved in any sort of transaction or any sort of interaction, then yes, absolutely. I think reducing fraud won't just be an element in digital insurance. I think it will be an element in fraud in transactions, payments transactions. I think it could be fraud when it comes to obtaining credit. It could be fraud in a host of different products. I think it goes back down to the fundamentals. If a fintech is open to the broader ecosystem, so we're looking at aspects like open banking, where a bank is interconnected to, let's say, Geoff's platform, which is a crypto platform, is connected towards a neobank like OPAL, and we're able to get a more complete picture of a particular client and his or her counterparties. And we understand their behavior, we understand their genuine transactions and the nature of the business, then I believe that detecting and preventing fraud subsequently will be much easier and much more transparent.
Yeah, I think if we have any, we have a couple of other questions as well from the chat, and I'll ask those at the end because there's a couple that are specifically for each of you, right? But so I just wanted to know, obviously, COVID, we're still dealing with the pandemic, right? And it seems like, I don't want to, talk too early on this one, but it seems like, we're seeing the light at the end of the tunnel on this, right? But what are some lingering effects of COVID-19 and how has it affected, or how will it affect the fintech industry in, this year or later on in the future?
Yeah, so that's again a vast question, and I can tell also, I can feel a little bit of optimism in what you said, Stephanie, and I think it's a good feeling because over the past 2 years it has been quite difficult, quite intense for the whole APAC region, but for the world to just deal with this COVID situation, extremely difficult. What I can observe in Singapore and in APAC compared to Europe, for instance, and I've been to Europe recently, is that I'm still impressed by the capacity of the APAC citizen to adopt new method of payment in general. If you go to Singapore, in Malaysia or other countries, you can see the number of payment tools and instruments that you can use is really, not to say mad, it's really amazing. So I can see that the consumer in APAC has this capacity to really adopt and embrace all those new disruptive way of paying compared to the whole world or in Europe, I would say. That's my view here. So for sure, as I said, I think in the introduction of this great webinar, the way people consume has totally changed. The online e-commerce and all the fintech payment methodologies that gravitates towards that have really brought lots of added value, and I think Ming Wang is one of the beneficiaries of this with his company. So I guess we're going to see more and more merger of services, more and more partnership, more and more collaboration to achieve this sort of unique app or unique platform where consumer can pay, can book, can choose, can invest, can redeem, can do remittance, and things of that nature. So I think the world is the consumer way of dealing with that is extremely promising in APAC, and I'm sure the rest of the world will follow that.
Yeah, I think I agree with a number of the key points that Geoff has raised. It feels bad to be able to be a beneficiary in some ways from a business standpoint over the pandemic. But the reality is it's been heartening and also helpful for our company that in APAC, the ability of businesses and consumers to adapt to going more digital, going more mobile. I mean, it's a rhetoric we've heard many times. I don't really have to flog it, but when I could see businesses, because we serve primarily SMEs in the region, and we could see them wanting to adopt more digital interactions with their clients and customers, it meant that they were also looking towards transforming the way that they had access to their finance for business solutions. So really, as a neobank, like Geoff pointed out, in fact, from a business standpoint, it did boost it. Obviously, it's not something that we want to celebrate because the pandemic has been difficult for everyone, for me and my family. But at the same time, it has accelerated, I think, the adoption of new ways of doing business, right? And it has allowed even SMEs, you'll be surprised, many that we talk to on the ground, and we get visibility into the numbers because they're making payments through us, they're getting financing through us. We've seen them grow strength from strength. The ones who were able to quickly change their business model have actually seen an acceleration, and they're moving lots of volume. So if you were to talk about the impact of the pandemic in the sense of fintech, there are positive sides to how businesses have now adopted fintech solutions.
I think so. Both of you touched on different points. So Geoff, you mentioned that we'll probably be seeing more collaboration and partnerships in the future. And Ming Wang, you mentioned that obviously the pandemic has accelerated the adoption of new tech, right? So with those two points of view, right, what are some subsectors of fintech that we should keep an eye out for?
Yeah, so I think in terms of insurtech, if we start with that, we can see more and more services and platform who are trying to aggregate more and more data. And I know there is some pros and cons against that, but by tailoring and gathering more data, we have the capacity to help, or insurtech players have the capacity to help consumers to really tailor the way they are covered for themselves and for their relatives. So I guess that's the first point. So it's like finally having an algorithm capable to detect with all your data that, you're paying 3 times, 4 times the same type of cover, where you should need just one time this sort of cover. In terms of blockchain / game tech and robo advisory, I come back to this. I'm sure we're going to see more and more funding in this domain. This is for sure, and more innovation, just because it is a non-regulated sector, and almost every day there is some new protocol and a new way to sort out some issues that we are having today in terms of interoperability with the blockchain. So more and more play-to-earn protocols. We can see that some play-to-earn platform have evolved super greatly in APAC. Some APAC citizens even just generate revenues, day-to-day revenues from those play-to-earn protocols. So I think it's an amazing period. APAC is a great place to be to observe that. And that's the type of trend that we can see if we consider blockchain still as a subsector.
Yeah, I think I'll add on to that, right? I think some of the subsectors, one is that whole aspect of more utility of digital channels, plus the fact that the different fintech platforms are now being more connected, not only with each other, but even non-fintech platforms. So you might have, like for us, a neobank connecting towards an accounting software, for example, because it provides convenience for our clients. But what that actually means is there's a lot of valuable data and alternative data that will allow us to do a lot more personalization with regards to the solutions that we provide, the type of products we provide. We will be able to obviously manage risks, whether it was fraud that we touched upon, whether it is insuring certain trades, whether it is credit assessment. So that culmination of, I think, shared data, again, in a controlled framework that protects the consumer, I think we'll see a boom in the utilization of alternative data, and obviously AI that complements it in the fintech space. So I think as a subsector, AI firms that are able to leverage this growth and burst of client financial data will be something that we're definitely keeping an eye out for. And the other thing as well that I think we've noticed is probably more related to Geoff's side is the new subcultures in investing, right? I used to be with an investment firm as well, and the things that you look at from the fundamentals of businesses these days may have evolved to other aspects, other motivations. You're looking at momentum, you're looking at hype, potentially, but rightly or wrongly. But you're seeing new subcultures where people are able to trade in NFTs. You're starting to see ETFs for crypto, for example, right? And so you're seeing this boom and adoption of subcultures, not just from institutional players, but even retail investors are looking at the alternative assets now. So I see that as an interesting subsector in fintech as well. The investing world, how it's also evolved, in the last 6 to 18 months, I think as another subsector that is quite interesting.
Okay, yeah, and I think so. Both of you discussed, data, right? Obviously, it's quite popular nowadays. Data personalization, fintech services, right? It's something that's growing quite a lot. What would you say are the pros and cons of this?
Yeah. So again, I think. Of course, the fact to gather more and more data into one place to better serve a customer can for sure ultimately enhance the user experience. Because the more we know in terms of data of someone, of a consumer, to serve that person into a better way, the most we can deliver what we provided as a service and what we have promoted. So I think there are a lot of issues to tackle prior to reach that destination. The first one is, okay, you develop your service into one country, and then everyone is joining your service, they register, but guess what? They are not coming all from Singapore, they're coming from other countries. So there is this notion of data privacy, this notion of what we call PDPA in Singapore, but there are lots of other acronyms for the rest of the region. So there is a first element of data privacy. Then how do you secure those data? Once those data, let's say the client decides to leave, what do you do with the data? Do you delete the data? Are you regulated? Are you not regulated? So I guess from a data personalization, we are moving towards that global cloud sort of storage. But there is an element of finding the right balance in terms of what data exactly we take, how secure are they? Do we sell? What do we do with those data? Do we sell them to someone else? Because there are lots of law behind that. So I'm sure lots of fintech can bring added value to this, but there is some element of regulation and data privacy management to keep in mind. Yeah.
Yeah. So just to add on whatever I shared earlier and what Geoff has mentioned, I think the pros are primarily the ability to customize solutions and products that people care for, that they individually want and actually need. It also provides, I think, an opportunity to provide visibility into the financial health of an individual or business. I see that a lot more with retail consumers, but not so much on the business side. I see some banks starting to do that, but I think it's still pretty nascent. So those are definitely the pros. It gives you clear visibility of your financial health, and you're allowed to have customized solutions, products. Another pro is I think it really forces, like what I mentioned earlier, fintechs, banks, non-fintech players to really collaborate to then understand the customer's use cases and pain points. And you can do it much more easily today than you could many years ago, right? The cons is, issues that Geoff touched on, right? Exposure to privacy. I give you an example. There are AI companies that have done magnificent work, but the premise of how they add value is by analyzing something like behavioral data. So it's not even your business transaction data or how you're spending your money. It's where they have visibility into the type of social media activity you're having. And from there, they draw a correlation to see if you're a high risk or low risk individual. But as you can imagine, when you're digging that deep into someone's behavioral, personal social media platforms, there's a lot of risk of data leaks and the data being used very, very responsibly. So those would be the cons. But I'm definitely leaning towards having that open banking in a responsible, gradual way, for sure.
Okay, perfect. Yeah, and I think in terms of we've discussed the challenges in Singapore. I think from a more regional point of view, right? What are the biggest challenges and the opportunities, right, that fintechs face in Asia Pacific?
Yeah. So I've already touched on data privacy, user privacy, of course, security problem. When I'm saying a security problem, cybersecurity and service interruption. In any sector. It can be in the banking space, insurance space. There are some news articles on that nowadays. So at the same time, managing this security problem and keeping up with modern technologies. So that's for the traditional finance sector for sure, and insurance. On the fintech space, keeping up with our new platform and new technology, nascent technology, but at the same time to keep in mind the policies and framework of each country where we operate. Overall quality of software. When I say quality of software, it's of course the coding itself, to make sure that we avoid any compromission for us and also for our clients. Like I said also during this webinar, the fact to have some regulation converging to the same destination in terms of requirements to streamline, I think, the business across the region and to manage those sort of scaling up, kind of. There is an element of ethics, and when I say ethics, Ming Wang was mentioning about this NFT space, and that's an exciting domain. That's an exciting industry. We all love it, but we have also seen some excess of speculation, also on the cryptocurrency space, by the way. But all that should not be transformed as a sort of market manipulation to finally compromise some vulnerable customers. So I think that's an element in terms of challenge that we are all facing. So not just the regulator, but also the crypto industry, the blockchain industry, because there is an element of reputation here. So I guess that's important to keep the notion of ethics in what we are doing. Maybe an element of innovative authentication processes, and I think that's applicable for Ming Wang's business, payments, but also for our site, how to simplify the customer experience while managing these cybersecurity things. The notion of when we decide to outsource some of our activities to another countries to optimize our cost, there are still some challenges here. I think it's a long one, but that's something that I may think of. And yeah, so long as we operate in a country where the legal framework, the tech framework, we spoke about Singapore for the PSA back in 2019. Maybe it's not perfect, but at least we have a framework. And I think the best way to tackle all the business challenges that I said about security problem, quality of software, ethics, and so on, comes also with a robust framework and to keep a close contact with the regulator to move on together. Yeah.
Yeah, I think overall I'm still very bullish. I think it's still the nascent stage in most regions in APAC. We are definitely seeing a growth of lower middle and middle income households. I have personally observed a leap in tech adoption. So if you go to some Southeast Asian markets, you have 20% of the market having bank accounts, but 100% of them have mobile phones, mobile data plans, right? And they have access to microfinancing institutions. They're using e-wallets, and they don't even have a bank account. So there is a leap in tech adoption and a growing middle class. And these are generally signals of, I think, a growing addressable market, right? At the same time, there's still many, many areas underserved. So you see a lot of fintechs booming, but in terms of the areas that I see are still underserved, there's still many more. There's also a growth I think in terms of sophistication, whether it's from a regulatory standpoint or even from the consumer being more open towards different products, whether it is in crypto investments to even financing or payment options for the business, I definitely see a growth in that sophistication. So I think there's ample business opportunities and chance to grow product offering in the region. I think that's why I'm very bullish about it. If you talk about the challenges, there are a few. I think one is obviously the regulatory uncertainties, right? I think that remains in the back of the mind of every fintech executive. But that's part of it. And I think we have to work very closely with regulators, be very transparent, build that trust and that commitment, and then I think we will see progress. The second thing that I do see is definitely talent crunch in the region. Sometimes I think my team we are full of ideas, and to execute it, we do it ourselves. But sometimes when you need to hire key personnel, it can be a bit challenging because the talent here is still being exposed gradually to the new innovations taking place globally. That's the second thing. And the third thing, we were talking about the interconnectivity of different fintechs moving towards open banking. But the truth is, I think we're still lagging very much in the region compared to, say, our European counterparts. So I think there's some probably, whether it's from a culture of protectionism in each market, or it's just taking time to evolve to that state. We do see that the culture of open banking is still lagging. We see that progress. I know there are a lot of articles talking about it, but on the ground, I think it's still very much lagging compared to some of our counterparts, say in Europe, which makes it hard to then have things like data personalization to improve price efficiency and transparency.
I think to follow up on what you mentioned, Ming Wang, about the difference between Asia and Europe, right? In terms of fintech, right? Maybe if we take it to a more local level, since all three of us are based in Singapore. Do you think that Singapore will remain an attractive global fintech hub, in the near future?
Oh, this is for sure.
100%. Yeah.
Yeah. Go ahead, Ming Wang, please.
I like that you both agreed right away.
Yeah. I mean, maybe it's biased because Geoff and I are here for a reason. Definitely, right? I think Singapore is so I'm Malaysian, right? I grew up in Malaysia and then the UK and then lived in Phnom Penh as well, running a payments company. So if I have to give a comparison, and obviously investing in the region, right, on the buy side, but if having that oversight, I would say that Singapore as a dense concentration of talent and people and culture towards fintech in Southeast Asia is a fantastic hub. It is, from the commerce aspect, still seen as and it's the Singapore branding is the gateway into business into Southeast Asia, because it has very good frameworks, it's good legal regulatory frameworks. It's a stable currency. Its sophistication with tech and finance is obviously quite developed. And so that's why I think in that sense, Singapore is very strategically placed. For a number of years, I used to fly between Hong Kong and Singapore. We're always competing to say that they were the hub of fintech in Asia. And of course, there's been, whether it's from political shifts taking place in Hong Kong right now, a number of different reasons with the pandemic and how they're handling it, there has been a flood of funds and capital actually coming towards Singapore, to be fully transparent. So if we talk about whether Singapore will continue to be a fintech hub, 100%.
Yeah, so Ming Wang comes from Malaysia. I'm coming from France. So maybe if I'm responding to your question, Steph, from a crypto lens. So in France, the crypto market adoption, which means the percentage of people having cryptocurrencies with them is 8%. Okay, and there are more people in France having cryptocurrencies in a digital wallet than having stocks in any portfolio. So just to tell you the level of vertigo where we are in terms of cryptocurrency adoption. So when we come back to Singapore and APAC, the percentage of cryptocurrency adoption across the region is 16%, 2x, the double. I don't have statistic on what's the amount of people in APAC or in Singapore having stocks, but I suspect maybe there are already more people having cryptocurrencies and digital wallets than having stock itself. So, of course, I'm bullish, number one. And number two, again, I think Singapore is definitely an attractive fintech hub. To me, it goes without saying that this is a place to be right now in APAC if we want to develop a business with lots of discipline, of course, in terms of framework, in terms of ethics, in terms of legal aspect, for sure. But once we validate that and we work with the right person, tech, compliance, ops, then there is a way for anyone who wants to set up a business here.
Okay, perfect. I think, yeah, I mean, we can all agree, we're at the right place, right time in Singapore at this time, or, hopefully it will continue to still be that way, right? But so far all good on that one. I think now we will just go over a few of the questions, right, that have come in through the chat. I believe this one is mostly for Geoff, as they talk about TradeTogether, but Ming Wang, if you want to, give your piece afterwards, that's fine as well, right? So the question is, given how the crypto space is extremely volatile, especially with what we've been witnessing in the past couple of months, what are some of the challenges that TradeTogether is facing now? They clarify with, maybe in regards to the onboarding of new clients who might be a bit hesitant to invest in crypto.
So I guess the challenge that we are facing is, which is a positive challenge, is to onboard all the clients because we've received lots of demand. Again, we are serving today high net worth individual and institution, and we are not serving retail customer, but maybe one day. So that's the first one. Number two, I guess something interesting on our business and with our robo advisory is that we are really what we are developing is like a driveless car. So the purpose is really for you to experience a journey where you go into a vehicle, you select your destination. Of course, there are going to be some risk because there is no free lunch, but we will help you to manage the risk towards that journey. So the challenge behind is that in that journey, there is constantly new protocol, new direction, new blockchain, new this, new that. And this is where we know that the added value that we bring here is to assess for you the level of risk of all those new protocols, those new direction, and to help you to reach that destination, such as what you decided when we started together. So the challenge that we have here are the best challenge in the world, so long as we manage this risk-based approach that we have, and this is how we operate here. So it's challenging because we have lots of new clients, but that's a good challenge for sure.
It's a good problem to have. Yeah.
Yes.
Okay, perfect. And then there's also a question from Ming Wang, which actually ties into my last question for both of you. So Ming Wang, you can go first, because my question was, what are the future plans for your company and what products can we, look out for from you guys, right? And the question from the chat from Ming Wang was, does OPAL have any plans to adopt crypto payments into your solutions in the foreseeable future?
Yeah, so I'll try and address that So I'll address I think the question from the chat pertaining to adopting crypto payments. It's something that we are definitely looking at very, very closely, and we have done our research and preparation for the potential adoption of it. Presently, I think in the short term, the answer is no. The reason being that to serve our clients' specific pain points right now, we're being very focused, and there are a lot of more core areas to address. The second thing is also we are actually quite agnostic with regards to the back end systems that we use to serve our clients. I know a lot of people who are almost cult-like, where they're like, oh, you need to use interbank Swift, or you need to use blockchain. You need to use netting off. You need to use tech rails. You need to use, for us, we are agnostic in that sense. Unique selling points is in fact our technology that's able to adopt multiple different payment solutions, and based on your, the country you want to send to, the currency involved, your credit timing, we're able to customize the one that best suits you. So we are very much open to adopting crypto payments as well. It may be in the future, but it's not going to be a near-term thing, just because we have a full roadmap of things that we really need to address for our clients on the ground. So then the question is, what are we going to be rolling out? So recently, a number of things we've pushed for named accounts for all of our clients. So that means that you basically are having like a bank account globally, but in your name. And if you were using traditional banking system, you might take that for granted. But not a lot of fintechs have that capability, and that's very important if you're doing international trade as a business, because if your payment account is different from your invoice name, you don't get paid. Whether the bank drops it or your customer doesn't want to pay you, it could be a bunch of things. The other thing is obviously the buy now, pay later trend. So we are, in partnership with another fintech as well in the lending space, and we're looking to be able to introduce buy now, pay later, but for businesses and for international trade specifically. So that's the unique aspect that we are looking to bring on. Instead of just buy now, pay later for retail, it's something for businesses who are having cash flow issues, that they need that support with their international commerce. So that's another key thing that we're looking to bring. And then the third thing is obviously to provide an opportunity to give that 360 financial health visibility for all of our clients. So these are the high-level broad projects that we'll be probably working on over the next 12 months.
Okay, perfect. Thank you. And Geoff, what can we expect from TradeTogether in the future?
Yeah, sure. So on our side, first of all, our MVP will be live at the end of the month. So at the moment, we are sharing a report on a weekly basis, and then our customer will be able to look at the trend and their portfolio from the mobile app itself. So I think if you want to have more details about the product, you can go to our website. Since we have an exemption, we are not allowed to go in detail about our product. So you can definitely look at the website. It's on the background. And on the long run in 2022, we are planning to open several desks in the region. We are working on that. So we are about to discuss with a few regulators across APAC and also Europe. We are also targeting why not opening a branch in Europe, because there are lots of needs for crypto guidance and robo-advisory solutions there. And why not in the US? So that's pretty much the plan for 2022. And you can see the agenda is quite heavy.
Perfect. I think, it sounds like you both have some big plans for this year. It's great to see how the fintech industry is developing in Singapore and abroad, like you mentioned, right, and expanding to other regions as well, right? But yeah, thank you both for your time today. It was great speaking with you both to understand a little bit more in terms of the fintech industry and the future of fintech industry in APAC, and what you're both doing. And thank you as well to the people that tuned in, and those who will be watching after the live as well.
Oh, thanks everyone. Thanks, Stephanie. It was a pleasure.
It was a pleasure. Thanks for having us.
Thank you. Bye-bye.